Hey traders, what's going on? Welcome back to another Pip Breakdown video. Today is Sunday and the market is about to open in let's say 7-8 hours or so. So we need to get the full market prep done and prepared to go for next week. So let's just jump into the major currency pairs. I've already did my analysis, so I'm just gonna go through and explain it. And then we have something to work with for next week, and we'll get a good general perspective of the US dollar. I know last week we said the US dollar was transitioning from one state to another. This week we can just see the same thing still happening. If we check the weekly time frames, we can see prices at a resistance for this pair, and some of the others they're at support and resistances depending on the US dollar relationship, whether it's the cross pair or the main pair. So pretty much, let's just have a quick glance at what these major currency pairs are doing. AU is currently at a resistance. Now, I want to take a look at the candlesticks that we're getting. So we got a bigger one, a smaller one, right? And then we get another smaller one for last week. Still unable to close above the resistance, and sellers are showing themselves here, not fully because the candles are not red yet, but we're unable to go higher. Price has stopped advancing higher, which shows that buyers are exiting and sellers are present there. Okay, so I went ahead and I did my analysis to show these projections. So take note that even though the daily time frame did close above the resistance at some point in time, and then it closed back below, the weekly time frame didn't close above at all, so it never broke out to begin with. We're never looking for any trades to the further upside because we never get any break of resistance actually, and we never get a retest of that. I have these projections here because we're going to expect further downside to come in on this pair, and like I said, we'll be able to see the correlation on the other US dollar pairs as well. Once we actually do manage to get an entry on this, we're just going to expect price to go to the further low side. What would be good is pull back right up to this to get an entry. Stop loss goes on the other side of the zone for safety reasons always. Stop loss just always goes on the other side of the zone. Sure, your stop loss is very dependent on how much you are willing to risk and what you're comfortable with risking, but for your stop loss must also be at a place that if it gets hit, it proves your analysis is wrong, and then you can go out for your next opportunity, right? Can't be getting sad and mad and stuff over your losses. And then I have this projection here. So if the uptrend market structure does continue, because we don't have bearish market structure yet, if it does continue, we go back to the upside. The only way I would be taking a trade to the upside is if we get a pullback to the new support area. And like I said, stop loss on the other side of the zone. But we need the candlestick formation. We need everything to get into a trade before your stop loss ultimately gets placed. So overall general perspective, I'm going with a bearish bias for next week. The momentum is slowing down, and not only just here, but on the other pairs as well. So if we go on to Euro USD, we actually have the consolidation at the resistance. Let's check out the weekly real quick. So same thing as AU. We got a lot of bullish pressure, and then the next candle was smaller, and last week's candle is just smaller on top of that, right? So the pressure is fading from going up to going down. Well, at least not straight to going down, but from up to consolidation, and then where we see what trend it breaks into after consolidation. But we are also at a resistance. So like I said in the last video, this is just these are influential areas because from the correlation by support and resistance, many of these US dollar pairs are at a resistance or support, right? So they're all at a key area right now, which shows significance among the US dollar as a whole. So this pair here, if we go down to the daily time frame, see what it could do for the next 5 days. Like I said, we're consolidating here, but going with the other pairs that are showing US dollar strength. So if we manage to actually break below this resistance area that we're in, we need a retest back to this area again, break below, retest, and then continuation to the downside. If we don't get that, it's going to be a break, it'll be a break above, retest, and continuation to the upside. And like I said, those are your entry areas on your pullbacks, and your stop loss goes on the other side of the zone. This is for the shorting, and this is for your long position. Stop loss goes on the other side of the zone, safety reason, okay? So here we just, the pair is still consolidating, but we can see on the weekly time frame that the momentum is slowing down, and then the daily shows us that again. The 4-hour time frame is just where I'd be looking for any opportunities and things like that. Next week they'll just be to the downside. So if you're not in Telegram, make sure you get into Telegram. You can see what trades I'm actually taking. You can check the link below, the description below, and you can get in there. Here we have one resistance, and here we have resistance number 2. So we're going to look to take some short positions from here for next week. Let's just hop onto the next pair and see what it looks like. GU. Weekly time frame, we did reject the resistance again. So these are 3 pairs at a resistance rejecting, and really we can see the momentum fading. The US dollar is really trying to step in here. So it's the same thing we have here. We're waiting for bearish pressure to come back in. We could take a sell trade, a sell pending order trade, just by putting a limit order right back at the resistance. For the retest that we want to get a nice entry in, a good risk to reward, stop loss other side of the zone, and then your take profit is really wherever you want to put it, but I put it according to structure, which would be this one here. And it's risk 1 to gain 2.3. I do want to just mention this real quick. So these were last week's projections. Each of these are 5 days and 5 days in advance. So the last 5 days we did fall. We rejected the support area, went back to the resistance because we had a bullish bias for last week, judging by the weekly candles, right? This week didn't happen to be bullish, but we still managed to grab profits where we could. But the end result showed us that the market strength was transitioning. Okay, so let's jump on to the next one. Same thing here. So this was the analysis that we had for last week's video. Price did manage to pull back up to the resistance. It triggered in our entry, just like those 2 previous setups that I showed you. And price is going down to its TP area now. Okay, and we had risk 1 to gain 1.2, risk 1 to gain 2, sorry. Weekly time frame, we already have the turnaround going, so we're expecting the bearish pressure to continue. New Zealand weak, US dollar strong, and we'll see how price actually reacts to this support area that is heading to. We always need trades on retest. This is why I have this marking here. So the only way we're getting into a trade is if we can break below the support, come back up, get our candlestick formation, and our stop loss goes on the other side of the zone. Judging by candlesticks and stuff like that, like I always say, I have 3 criteria that must be met for my stop loss to be placed properly, and then I always expect the old trend to continue. So I always expect the old trend to continue, and so we have previous bearish market structure which we seen developing from last week. That should lead into this week, and then we should try to make our way to the next support. But always, top-down analysis, things like that. I'm not entering from the daily, so I get a better risk-to-reward ratio on lower time frames. Keeping my stop loss the same as these and keeping my take profit the same as these, I'll just get a more on-point entry from the 4-hour. So these next 3 pairs, we're going to see a bit of shift from the downtrend structure just to uptrend structure, just because the US dollar is now going to be the dominant pair. If we look at the weekly time frame on UCAD, we're still not getting buyers in the market, but we do just see the sellers are having a hard time to stay in. The candles are getting smaller, just like we've seen from the other ones as well. But price is holding at a support area. We seem to have one support area as a double bottom and another support area acting as a structural low area for a higher high formation, if that's what price is looking to do. Okay, so just going on to the daily time frame, we can see the structure. I went through and I marked this up already. The structure overall is down right now. If we manage to break this high area, we can see price break out into a potential higher high structure, where we would then need a retest of the old support, the old resistance, new support right here to take a trade back to the upside, rejecting one resistance being this red line, rejecting resistance number 2 being this blue line. And then we can take a nice good trade with a nice risk to reward ratio, depending on whatever you want, depending on how the candlestick's set up as well. You could take a nice risk to reward ratio depending on the previous structure. That's risk 1 to gain 2.7. And then if we just look at this pair as well, we can see, so the US dollar Swiss did break below its support area, showing further downside. Given last week's candle shows buyers are trying as well, So they're both definitely trying their best right now. The bears weren't strong last week in their candlestick formation. So what we're really waiting for is price to get back up to this resistance area and see what candles form in here. What is the strength of momentum of the currencies in that area? And then we have the potential to make lower low structure continue. That's where we get this idea, stop loss other side of the zone, and we expect further downside. If the candlesticks don't form up to a bearish setup, the only way we then take a trade is we need that push back above, right? Push back below. At the new support area, we need market structure candlestick patterns to get into the market, and then we take our stop loss other side of the zone, safety reasons, because the way support and resistance works, it's never supposed to break the support or the resistance area if the trend is to be followed. Sometimes that doesn't always occur, but this is why we know we have like statistical losses and statistical wins to our trading plan and things just like that. So we don't get mad if the price breaks support and resistance, but we follow the trend, right? And the support and resistance helps tell us the trend. Okay, so this one's more indecisive just given the fact that we did break below the support, but not to say that this doesn't happen, because we know these things happens where it would break above the resistance or gives false breakouts and things just like that. So a lot of traders would consider this as a false breakout if we do break back to the upside, but we'll just wait till next week. I'm not too interested in taking a trade on this pair for next week. But if you're in the Telegram, you'll see all the trades that I take. And we'll do a pip count at the end of the week, and we'll see how all that went. The last and final pair, US Japanese yen, we're at the support area as well. And we see the momentum shifting here from the bearish bias to the bullish bias. The candle went from the last three candles, it's a big red one, and the next one is a smaller red one. With a long bottom wick showing buyers, and last week's candle is actually green, showing more buyers. Buyers are showing more of an impression here. So I went ahead and I did my markup for yesterday's video as well, where I showed you guys my update of the Telegram trades that I'm actually having sent to the Telegram. So here we're just looking at the setup for the bullish bias to continue. We have some support areas from last week. This was last week. These orange lines are last week's analysis, where we've seen that we had the potential for price to reject the first support area or the second support. We can see last week we didn't actually make it all the way down to the second. We stayed at the first, and price is giving us that bullish market structure that we want to go to the upside to take a higher high trade, getting at the low and bring it back to the high. Okay, so just take a look at it. We can see the buyer trying to come back into the market on the daily time frame with these candlestick strength. Okay, so that's all I really want to say for this video, guys. We can see the strength. We can see, if we even go down to this one, we can see a lot of pressure. Things are turning around now here as well. So this is correlation. This is checking out all the currency pairs to see which one is strongest and where can you put it on its strength. So you don't trade two currency pairs that are closely related in strength. Gold has been performing really well, and it looks like the US dollar is definitely going up there to start being a dominant pair. Even the US dollar index right now, we're coming from a consolidative state. Previous from a downtrend, last 3, 6, 7, 8, call it 9 days, we've been consolidating. So we'll see if we break out above this area and see any major damage done to the other pairs by the US dollar. Thank you for tuning into this video, guys. I'm very appreciative, and I'll catch you in the next one. Peace.